Nothing is broken this morning, and that might be the most uncomfortable part. Corn, soybeans, and wheat are all sitting at prices where the next move matters. But the market isn't giving anyone a clear signal yet. There's no panic, no urgency, and no confidence either. Just a lot of waiting. And when markets wait too long, they usually force decision whether participants are ready or not. That tension is sitting right under the surface as we start the week. Thank you for spending your morning with me. This is Boots and Bushels, your daily look at the markets that feed America. Let's start with where the pressure is showing up first, in the grain markets. Corn closed Friday near $4.28 on the March contract. This is one of those prices that looks boring on the surface, but is doing a lot of work underneath. Corn has tested this area multiple times, and each time selling pressure has slowed. But buyers haven't shown enough conviction to push the market higher either. That tells you confidence is missing on both sides. End users are comfortable waiting. Producers are watching closely but not rushing in to move grain. When both sides hesitate, price becomes the tool that forces action. As long as corn holds here, the market can stay patient. But if it slips early this week without support showing up, traders will quickly start asking how deep demand really is below this level. Soybeans finished Friday near 1064.5 on the March contract. Beans feel heavier than corn, even though they haven't broken down. South American supply expectations continue to hang over the market, but this selling pressure hasn't been aggressive enough to create momentum. At this price, soybeans are stuck between two comfortable ideas. Supplies are expected to be large, but demand hasn't disappeared. That uncertainty is what keeps the market choppy instead of directional. If beans can hold this range, the downside pressure stays limited. If not, patience will wear thin quickly. Wheat closed Friday near 518 on the March contract. Wheat has been quiet, but at this price, quiet doesn't mean safe. Wheat is cheap enough that uncertainty matters more than usual, especially with winter still in control of much of the plains. The market isn't pricing the damage, but it doesn't need damage to react. All it needs is doubt, and when wheat is this inexpensive, traders pay closer attention to anything that could change assumptions. Oats wrapped up this week near 304.25 on the March contract. Oats remain lightly traded, but continue to mirror feed grain sentiment. As long as corn holds together, oats are likely to do the same. Live cattle closed Friday around $236.75 on the April contract. Cattle continue to trade like a supply-driven market because supply remains tight. Pullbacks have been shallow, and buyers continue to show underneath the market. That tells you this market isn't searching for demand, it's managing scarcity. Until placements change meaningfully, cattle prices continue to have support. Feeder cattle ended Friday near $359.83 on the March contract. Feed costs are a big piece of the feeder story, and with corn steady, feeders remain supported. This market reflects confidence in longer-term fundamentals more than short-term volatility. Lean hogs closed the week near 95.25 on the April contract. Hogs remain two-sided, with traders watching demand closely. The market hasn't found a clear direction yet, and until it does, expect continued back-and-forth trade. Crude oil finished Friday near $65.74 on the March contract. Oil firmed late in the week and continues to matter for agriculture. Fuel, fertilizer, and transportation costs all trace back to energy prices, making oil an important piece of the broader farm cost picture. Direction here still matters even when the market feels quiet. Weather isn't dominating headlines this morning, but it hasn't disappeared from the equation. Cold risks remain across parts of the plains, and snow cover continues to be uneven in the winter wheat areas. That combination keeps traders watching forecasts closely, even if prices haven't reacted yet. Late winter weather issues don't need to be extreme to cause concern. Timing matters, crop stage matters, and uneven protection leaves some fields more vulnerable than others. This is the kind of setup where the market stays calm until one forecast update changes the tone. Now in ag news, story number one, grain markets are testing everyone's patience. Grain markets are trading patience instead of urgency. Export demand has been steady but not aggressive, and supply expectations are widely known. That has left prices drifting at levels where conviction is missing. The risk here is that patience doesn't last forever. When neither buyers nor sellers feel pressure, price becomes the forcing mechanism. Traders will be watching closely to see whether demand steps in on the weakness, or whether the market has to surge lower for participation. Story number 2, tight cattle supplies continue to reshape market behavior. Cattle markets remain defined by limited supply. Even when futures soften, selling pressure struggles to follow through, and buyers remain active underneath. This changes how the market behaves. Breaks tend to be shallow, and recoveries happen quickly. As long as supply stays constrained, this pattern is hard to break. Placement data and feed costs remain key pressure points to watch going forward. Story number 3, weather risk isn't gone, it's just quieter. Weather risk hasn't disappeared, it's simply not loud right now. Cold risk and uneven snow cover remain part of the wheat conversation, even if prices haven't reacted. When wheat is on the cheap, the market becomes more sensitive to uncertainty. It doesn't take confirmation of damage, it just takes doubt. Forecast consistency will be watched closely as winter progresses. Story number 4, energy prices stay in the background for now. Energy markets haven't been volatile, but they continue to influence farm input costs. Oil holding near current level keeps cost pressures manageable, but any shift higher would quickly show up across the ag economy. The pressure point here is stability. As long as oil stays range bound, costs remain predictable. A breakout would change that quickly. And the last story, markets are waiting for a catalyst. Across grains, livestock, and energy, the theme is the same, waiting. Markets aren't broken, but they aren't confident either. That kind of environment often leads to sharp moves once a catalyst appears. Traders will be watching demand signals, weather updates, and macro shifts closely for anything that breaks the stalemate. These markets aren't panicking, but they aren't comfortable. Corn and soybeans are sitting at levels where the next move matters. Wheat remains sensitive to uncertainty. Livestock continues to lean on tight supplies, and energy prices remain part of the cost structure. This is a week where patience is being tested, and markets rarely stay patient forever. Thank you for spending your morning with me. This is Boots and Bushels. We'll see you tomorrow.